Joining me next is Adam Lass, who has made several appearances on Taipan Financial News. Adam is the creator of Wave Strength Charting System, which he uses to identify where the market might be headed. I'm usually skeptical of market forecasters, but Adam called the devastating September 11, 2001 crash of the market, the rebound in October 2002, and the 900 free fall in May of 2006. He's here to share his views with us on one market in particular, the real estate market. Adam, thank you for joining us.
Good to be here, Sandy.
Adam, Chris suggests we're entering a new bull market. What's left to drive the market to the new heights that Chris described?
Well, you'd certainly need to find something new, something that was undervalued at this point. I don't think the additional push can come from any of the existing sectors that are hitting their new highs. When you look around the existing destroyed sectors, you've got a couple of choices. You've got automotive sector. I'm really not interested in going there. And you've got housing. And to be honest, I think that could be where the next push comes from.
Okay, so you're suggesting here that you think that the housing market is really what's going to help to drive up the market.
Yeah, that would be the next place I'd look. We're really seeing signs that it's been about as destroyed as it could get. I mean, if you're looking for value, then you're looking for something that's not peaking, but available for more gains. And you can't hope to find anything that's been as put down and bad-mouthed as housing. But I think it's time for it.
Adam, you're absolutely right. It's been beaten down. But in a recent speech, Janet Yellen, president of the Federal Reserve Bank at San Francisco, said, "A significant buildup of home inventories implies that permits and housing starts may continue to fall and the market may not recover for several years." Do you agree with her assessment?
Well, I mean, you cannot miss that stat. They just announced today that permits hit a 5-year low. But that's sort of what we're looking for. And every bottom has a bowl shape to it. That is to say, you have some fact that it is truly horrible, like a 5-year low in permits, and then another fact on the other side creeping in that indicates that we could be seeing a little bit upside. An example there is we've just seen a spike in building starts for the first time since May. We're actually seeing an uptick in starts. And this may be the bowl-shaped bottom that we're looking for as a good, strong signal to start getting in.
Now, you know, in the media, it's very hard to find an article that doesn't talk about an impending real estate crash. Do you now see signs of a turnaround in the real estate market? You mentioned earlier you think it's going to help drive the market up. So is that what you're suggesting is going to occur?
At this point, I think people would want to start adding in. What you want, I mean, it's the classic Sports Illustrated curse. By the time someone shows up on the cover of Sports Illustrated, their career is doomed. By the time the mainstream media has identified a trend that's either making or breaking, they're usually about 6 weeks behind the curve. We've actually already seen the major brokerage houses begin to come in and recommend this sector tepidly at first, but we have seen as much as an 18% rebound already in the Dow Jones Housing Index. There are other places, though, that I might choose to look before there.
Okay, and those might be what?
Well, for instance, right now I'm looking at something called the Spider Home Builders. This is the S&P organization putting together their own list of a broad list of people that would gain from a home building increase. This isn't just home builders. This is the 4 best home builders off the Dow Jones list, but it's also the best carpet manufacturer, the guys that make wallpaper, the guys that sell paint, the guys that sell drywall. It's a very broad range of people that would profit from a turnaround.
And so you're looking at those, and what are you seeing? What is that telling you?
I'm looking at their chart and seeing A, a nice start, but B, room to go. I'm seeing the possibility of anywhere from another 7 to 21% gain. Oh, I mean, not right away, but it could start in the next 2 to 3 weeks, and it could easily run all through the winter, just building up steam and then gathering its full strength as we move into the spring.
Adam, do you believe that what we've seen in the real estate market is more of a cyclical correction than an actual bust?
Well, real estate doesn't have busts like stock markets have busts. There's no place to clear real estate. Real estate has its fallow moments, but you seldom see these complete busts in price. What you'll see is houses stay on the market. A real estate bust is more a question of how long it takes to sell a property more than an out-and-out destruction of that property's house. And mostly what I'm focusing on is the new builders, the new home builders, who really have the ability to change and flex with the times. So far they've been building these mega mansions, and maybe that's come to a head, but they have the ability to look at their properties and say, let's dial it back. We can go from 3-car to 2-car garages. We can increase the townhomes, make these a little more affordable. And I think now that we see rates starting to either plateau or maybe even come down a hair. I know that some of our analysts have suggested that we may even see a drop in rates coming up. I think we could be seeing another little rebirth, another rise in the home building cycle.
Okay, now you're talking about something I want to ask you about, because of course we know that the Feds play an important role in the real estate market with their decisions related to interest rates. What do you think they will do next?
Well, I know what I'd like them to do from an economist's standpoint, and I think I've got a pretty good grasp on what they're about to do. We still have some inflation problems out there, and I know that the pure economists would like to see the Fed either hold or maybe even raise rates a notch. That's not going to happen. At this point, that would require them to have what we in the business call a spine. And I think at this point their main totem is more along the lines of the jellyfish. They're not raising rates. In fact, I think we'll see possibly even a rate drop long before we see the next rate increase. They're far more scared of having their name attached to the R word than any kind of slow inflation. They feel they can come back and deal with inflation later. They need to deal with the economy slowing now.
Okay, let's just be clear. I want to make sure the viewers understand what you're saying. You're what you call the jellyfish Fed, you believe could possibly cut rates.
I believe we'll see a cut before we see an increase. I have been actually a bit of an inflation hawk. I personally am still an inflation hawk. I just don't think I have the Fed with me on this one. And it does not make sense to invest on what should be. You need to invest in what is.
So now that you see an upswing in the real estate market, what do you recommend investors do?
I recommend they hold a broad range of things. We already, for instance, have one of my readerships involved in Weyerhaeuser. We've done very well there. I believe we've got 23 or 24% currently under our belts in Weyerhaeuser. And again, I mentioned the XHB, the Spider Home Builders. We're moving our readers into that next via some very long-term calls. We're looking to date out to the middle of spring. These are both strong vehicles, whereas we see the index is capable of rising anywhere from 5 to as much as 20%. A proper option strategy can put a good 100% gainer under your belt.
That would be significant. So where could viewers get more information on these recommendations?
Well, of course, they can always get it here at TFN, but in addition to that, I have a great deal of information on this topic available at my own website, wavestrength.com.
Great. Thank you so much, Adam.